Welcome to The Explainer, everyone. Look, today we are diving into an absolutely massive structural shift that's currently happening right in the foundation of global finance. We're totally moving past those old theoretical discussions about digital money, and we're stepping into the real world of concrete, sovereign partnerships. These deals are quite literally rewiring how value moves across the globe. So today, we're unpacking a highly strategic, real game changer of a partnership between the Republic of Georgia and Tether to launch a brand new digital asset.
Okay, let's dive into this. To really understand why this partnership matters, you just have to look at this absolutely staggering number, $190 billion. That is the current market cap of Tether's US dollar-pegged stablecoin, USDT. When we're talking about digital assets today, we are definitely not talking about some experimental internet money anymore. We are talking about massive, undeniable scale. This is a foundational infrastructure that's already carrying the weight of a huge chunk of global liquidity.
And honestly, this perfectly illustrates exactly why this transition is happening at such a breakneck pace. I mean, if you've ever tried to send money internationally through traditional legacy banking systems, you know it's a totally fragmented, costly process. It can literally take days to settle. Stablecoins bypass that entire headache completely. Because they operate on blockchain rails, they settle globally in seconds. It's that dramatic difference in efficiency that's rapidly outpacing traditional financial networks right before our eyes.
So, here is our roadmap for today's explainer. First, we'll cover the global stablecoin revolution. Second, Georgia partners with Tether. Third, introducing the GELT stablecoin. Number 4 is strict rules and reserves, and we'll wrap up with number 5, a bridge to the future.
Let's jump right into Section 1, the global stablecoin revolution.
Right now, governments and central banks all over the world are being forced to confront a fundamental shift in how money actually moves across borders. They're quickly realizing there's just no way they can ignore this technology. And if you want proof of that shift, just look at how these assets are actually being used out in the wild. Stablecoins aren't just tools for crypto traders jumping between volatile assets anymore. Actually, Tether's 24-hour trading volumes regularly surpass legacy global credit card networks. Yeah, we're talking about beating Visa and MasterCard. They are actively driving real-world global payments, cross-border commerce, and remittances. It's basically a completely new baseline for transferring value.
To really anchor this macro perspective, I want to share this specific insight from Paolo Arduino, the CEO of Tether. He says, stablecoins are no longer a niche financial instrument. They're becoming part of the infrastructure layer for global finance. That phrasing, infrastructure layer, is absolutely key here. This isn't just some app you build on top of a bank. This is literally the new plumbing for the bank itself.
Moving on to Section 2, Georgia partners with Tether.
Now, you might be wondering, why the Republic of Georgia? Well, they're intentionally positioning themselves as a highly agile, early mover on the world stage. They want to integrate their national currency directly into this new global infrastructure. And this bold partnership isn't just some sudden overnight decision. The government and the National Bank of Georgia have spent years strategically laying out advanced, comprehensive legal frameworks. Their whole goal has been to attract digital asset businesses by providing crystal-clear legal rules rather than regulatory ambiguity. In fact, Georgia's environment is already so advanced that they have existing systems allowing citizens to make tax payments by instantly converting digital assets right into local currency. I mean, they are basically already living in the future.
Next up, Section 3, introducing the GELT stablecoin.
So what exactly is it? GELT is designed to function as a digital representation of the Georgian Lari. It's a fully private stablecoin issued directly by Tether, and it operates on those ultra-fast, efficient blockchain rails we talked about a minute ago. But I do want to make a very careful distinction here. GELT is a private stablecoin. This is completely 100% distinct from a central bank digital currency, or CBDC. The National Bank of Georgia is actually exploring its own separate blockchain variant of a digital Lari right now, but GELT is entirely a Tether product operating strictly under Georgian regulation.
By launching GELT, the Georgian Lari is joining an incredibly exclusive and established portfolio of Tether assets. Tether already manages USDT for the US dollar, XAUT, which is a gold-backed token, and MXNT for the Mexican peso. So by partnering with Tether, Georgia is essentially leveraging the company's massive, battle-tested experience in operating digital fiat infrastructure at a daily volume the rest of the world can barely comprehend.
Section 4, strict rules and reserves. Now, what's really interesting about this next part is how they're actually securing this whole system.
You might be wondering, how do you make sure a private company issuing national currency doesn't just, run away with the money? Well, the answer is rigorous mathematics and strict local laws. Let's break down these concrete financial requirements set by the National Bank of Georgia. Any issuer operating here must have a minimum capital of 500,000 Lari, which is roughly 182,000 US dollars, just to guarantee solvency. And this required capital scales right up as reserves grow, hitting a maximum requirement of 50 million Lari. Furthermore, if the stablecoin's reserves exceed 15 million Lari, the issuer is legally required to create a supervisory board and trigger mandatory audits by one of the big four global accounting firms.
Let's look a bit closer at those reserve rules, because honestly, they are the absolute bedrock of a stablecoin's safety. The National Bank requires 100% reserve backing for the tokens. There's no fractional reserve banking here. On top of that, the company's own funds must be strictly separated from client assets, and those mandatory Big Four audits we just mentioned, whether it's Deloitte, PwC, EY, or KPMG, have to be conducted quarterly, and the results must be published publicly on the issuer's website. This guarantees complete transparency, safety, and stability for the everyday users of Geld.
But what if a user wants their traditional cash back? Well, the framework guarantees that users can redeem their Geld at 100% nominal value, anytime. The timeline is actually baked right into the law. If you request a redemption of a sum under 300,000 Lari, that transaction must be fulfilled within 3 business days. For larger sums over 300,000 Lari, the settlement has to happen within 5 business days. It's an incredibly clear, legally binding off-ramp.
And finally, Section 5, a bridge to the future. Let's zoom back out to the macro-global stage for a second. We've seen the local rules, but the international implications of Georgia's meticulously crafted regulatory framework are what make this truly groundbreaking. So, the crucial point is that Georgia hasn't just built a system in isolation for itself. No, they've explicitly designed their stablecoin framework to achieve direct regulatory interoperability with emerging U.S. stablecoin laws, specifically including the Genius Act. By aligning their local regulations with evolving U.S. frameworks, Georgia is aggressively positioning itself as a fully compliant, highly interconnected hub in the global digital economy.
And this ambition, it goes straight to the very top of the state. Take a look at this quote from Irakli Kubahakse, the Prime Minister of Georgia. He says, "Together with visionary partners like Tether, Georgia is laying the foundations for a more connected, transparent, and digitally empowered financial world." This clearly shows that the highest levels of government aren't just tolerating digital assets. They are actively championing them to completely modernize their financial infrastructure and bridge the gap between traditional finance and the digital economy.
By combining Tether's unparalleled technological scale with Georgia's crystal-clear, forward-thinking legal architecture, we are literally witnessing the blueprint for how nations are going to upgrade their financial systems in the 21st century. It really leaves us with a fascinating final thought. As Georgia aligns its stablecoin infrastructure with U.S. crypto laws to ensure seamless global interoperability, which nation is going to be the next to step up and bridge the digital divide? The dominoes are officially falling, folks. Thank you so much for joining me on this explainer, and definitely keep your eyes on the horizon.